time of this recording, looks like Bitcoin is dropping below 54,000. It is Friday, so we'll see what happens, but things are definitely trending down. You can see it with the fear and greed index. I mean, we're at 22. I don't remember the last time we were at 22. We've got our friends in crypto that are creating backup plans. We got Cosmo Haas talking about how if it doesn't work out, he's going to go and learn about Linux and certification. I mean, all this makes sense because if you look at the S&P 500, I mean, this is the worst week that we've had in a year. And obviously, a lot of times that does trickle into crypto. But we've got one friend of the channel that remains bullish. Sentiment seeming at all-time low right now. Maybe that's the bullish signal. So I am joined by Max of Phi Labs, core contributor to Archway. How are you doing, my man?
Doing great. I'm doing great. And just to comment on that post, I don't know if I'd say I'm super bullish right now, but I'm hoping and I'm trying to will bullishness into existence with something like that.
So, and that's why I wanted to talk to you because during these uncertain times, it's a good reminder for us to stick to fundamentals. So that's what I want this episode to be about is what are the fundamentals that we should be focused on? What are the metrics that we should look at? So we'll dive into those in a little bit. We'll talk about some of these projects that some of them maybe are hidden gems and some of them are kind of, tried and true. So we'll go over that. First, I wanted to ask you because things are not looking good, but there's a 75% chance of a rate cut of at least 25 basis points, maybe even 50, but that's only a 25% chance right now. Do you feel like, is this priced into the market already, you think?
I mean, in my opinion, yes. I feel like I take kind of the stance that anything you see in the news is already priced in. The smart money typically gets wind of these type of things before the public, and they start to react. And then I typically feel like retail or the public follow suit based on what they're seeing. So when I hear stuff like the Fed was signaling rate cuts and now it's at a 75% chance it'll be a 25 basis point cut, I tend to think it is priced in already.
Well, that doesn't really bode well for the crypto industry. You're basically saying if tomorrow we have a 25-point basis cut, let's just, fast forward the timeline here, that we're not really going to see much of a price action. Everyone's already expecting that right now.
True. But it could also be one of those things where people have already kind of sold the news. And then when it comes in, you get that little bounce back because maybe it wasn't as bad as they thought. Like maybe they thought it was going to be 50 basis points, or maybe they didn't think it was going to happen at all. And a lot of times when people think an event is going to trigger price action, it doesn't, or it does the opposite. So like if people think if this comes in with the rate cut, it's going to dump the markets more. Sometimes that's when it starts going back up because once everyone's thinking one way, the markets typically go the other.
There's a lot of people that are pretty bullish. I saw this post by Crypto Rover where he was, he's more of a TA guy, right? And so he's looking at this consolidation here and he's thinking this is like bullish. So, to your point, I think there's a lot of times where we expect something to happen and usually we get the opposite effect, right? So we could be near the end of this sideways consolidation, this sell in May, go away stage that we were in for, quite some time. And so, how do we prepare for that next leg up, right? Which is what everyone is waiting for, expecting. And there's a lot of people have a lot of different theories, right? None of them is, of course, financial advice on this channel, but some people are saying you got to stick to your Bitcoins, your Ethereums, your Solanas. And then other people like you that actually work in Web3, you see all of the amazing development happening. You're talking to the actual teams. Your perspective is, very unique because you're looking at some of these projects like a business, right? Like a traditional business. You're looking at their financial statements, so to speak. So that's what I wanted to talk to you about is how can we take some of those things from the traditional world and apply them to crypto and focus on the fundamentals so that way we can be successful in the next leg up.
Yeah. No, I'd be happy to dive into that a bit. And just to preface this, like I want to be clear that even with sound fundamentals, if the broader like macro environment is not conducive to like a upheaval in price, you could still see losses on a lot of these different protocols or applications. But I do think when it comes time that the market eventually does turn, these would basically be ones that I would feel comfortable being positioned in. And really what I'm looking for when it comes to like fundamentals, when I say fundamentals and I'm talking about more of like the business side of things, I'm really looking at from like a protocol or application standpoint is like how much fees are you generating from like users? And on top of that, what types of metrics can you look at based on these fees to really understand what fees are relevant or significant compared to the valuation of that protocol? So like one of the big things I look at obviously is fees, and I'll look at it over different time frames, whether it's the last 90 days, the last 30 days, just to get a feel for who's trending what direction and who's actually just generating fees and ultimately revenue. And then another thing I really like to look at is it's called the price to fees ratio. But really what it's doing is it's taking the fully diluted market cap of the application or the protocol and comparing it to the fees being generated. Because a protocol could be like earning a significant amount of fees, but when you compare it to its current valuation, those fees actually might not be that significant given the value it's already trading at. So that's a big one that I really like to rely on to see which projects are really just fundamentally undervalued or have a lot more upside to them because of the fact that they're not being a high multiples not being applied to their fees. And then ultimately, I like to look at protocols that have real earnings. And when I say earnings, I mean after you factor in expenses, like things like token incentives, inflation, what have you. Because a lot of times you'll see protocols that are generating significant fees, but that's because they're giving away significant incentives to really incur that on-chain activity. And when you look at them compared to each other, it doesn't even out to the point where they might even be losing significant amount of actual capital every single month in these incentives despite high fees. And that's really apparent in a lot of different protocols. When I look through a few of these, and I have a few I'll mention and just kind of go through for a bit that I think are really interesting when you look at, people might see them as like the bells of the ball or the blue chips, but ultimately they might be fundamentally overvalued.
Interesting. Hot take. All
Yeah.
right. Let's dive into some of these.
Yeah. So, I mean, I'll eventually pull up some screen shares to showcase some of this stuff. But some things I wanted to first go through is like on the fee side. So when you're looking at like fees, like L1s generate a ton of fees. So when you're looking at like the top L1s, you have, Ethereum, Bitcoin, Solana. I'm not even throw like Tron in there. And then Base is another one that's been creeping up. And when you look at ones like Tron, they're actually generating what around 500 million in fees over the past 90 days, um, which is significant. I think it's actually the most out of all the major layer ones.
How much of that has to do with them being essentially like a stable coin transporter?
I would say a significant amount because some of the other largest fee generators are Circle, and I'm blanking on the other one, but they're
USDT.
basic, yeah,
That's
and
a
they're
big.
right, but they're not. They don't have any tokens. They don't have any. You can't really buy into their protocol, so therefore I didn't really include them in this. But stablecoin issuance is absolutely probably the number one way to generate fees because it's very simple. You just take a fee on all the stablecoins being issued or transferred, and typically that's your only on ramp into this space. So if you can kind of corner that market, you become very successful. But that's why most of them don't have a token. They don't really have a need to, utilize a token to either dilute their current value that they have personally, nor do they really want governance trying to have a say in what they're doing. So those were kind of left out in this scenario. And I really just looked at layer ones and applications. So like I was kind of mentioning with Tron, like they're probably generating a lot off these stables, but they're generating fees and they do have a token, the TRX token. So that's where I was kind of looking to give some people some insight. So when you look at Tron, it's got $500 million in fees over the last 90 days. It's almost double what Ethereum has done. So Ethereum's done about 250 million ish. And that's an interesting fact because I think most people assume Ethereum is generating the most fees. And if you look at it over like a year, that's probably true. But then that shows that Tron's making a lot of, it's picking up momentum in the current, I guess, 3 months or so with the amount of users and the amount of transactions going through their actual protocol. I mean, it's even about 4 times as much as Solana. Solana is about 125 million in fees. And what was most surprising to me was that Bitcoin only has 108 million in fees. And so, although that is significant, it's not super significant compared to the valuation of Bitcoin. When you look at the price to fees ratio, like I mentioned earlier, and you compare it to market cap, Bitcoin's actually trading at about almost 5,000 to 1. So for every dollar they're earning in fees, the valuation is $5,000, which is an extremely high multiple, in my opinion, for a layer one protocol. Solana's around 250, Ethereum's around about 550. So when you look at these fundamentally, you could argue those layer ones are actually overvalued quite a bit. Tron's only trading about 5. So when you think about that relatively, it's trading at 100 times less on the ratio standpoint than an Ethereum would based on fees.
All right,
So
Max, give me a second to digest this because
yeah,
you're essentially you're calling Bitcoin overvalued right now when a lot of people are looking at Bitcoin as undervalued. They're looking at these ETF inflows and they're saying, why isn't this, creating a more of a demand? Why isn't the price moving up because of it? Obviously, we've had Mount Gox and we've had Germany selling off, and so a lot of people are seeing it as undervalued. So give me a second to digest this because you're saying that Bitcoin is overvalued.
from a fundamental standpoint, in terms of fees, you could argue that. But when you talk about utility, that's where it gets a little bit different. And I think people will all view that in their own way. Bitcoin has staying power, it has institutional adoption, it's got regulatory favor. So there's a lot of things with Bitcoin that give it an what I'd call an intangible value. And maybe that is supported in its price. But when you're just looking and you're breaking it down into like basic numbers and objective figures, yes, when you're valuing your protocol at 500,000 or 5,000 times the amount of fees being generated, it does make it seem like it could be overvalued in that sense when you compare it to other protocols that are also providing a lot of the similar things as Bitcoin, but also generating more significant fees, especially when you compare it to the overall valuation.
What are some of the projects that you're looking at right now and why?
So, yeah. So for me, a lot of the ones I'm looking at are actually pretty well known projects. I think some of the safest bets right now are things like Lido, things like Aave, Uniswap. And the reason I say that is because they're really just producing a lot of fees. Like Lido specifically, insane what they're able to do. I know right now they're over the last 90 days they've produced 250 million in fees, which is more than Solana as far as I can tell. And it's almost as much as the layer one itself has generated, which is very interesting to see that an application is able to basically generate as much as the entire layer one protocol. And Lido's kind of like in a realm of its own, where not only are they generating a lot of fees, but they really don't have much for expenses or incentives, so they're profitable, and they're one of the very few in the space that are profitable. And so that's one that I've always going to keep an eye on, and I think right now they're trading at a 1.2 ratio, so they're almost generating as much fees as their actual fully diluted market cap. So I would argue that they are fundamentally undervalued. The problem is there's an inherent risk with liquid staking tokens. And I'm not going to get too deep into that because I do want to focus on just the fundamental sides and different opportunities. But you have to keep in mind that with liquid staking, there's always an inherent risk with one depegging or the fact that they eventually kind of lose traction because people may see them as kind of like, the subprime mortgage where it's just they're wrapping bad mortgages together into these other types of assets that people would buy. So it's a derivative of a derivative type deal where that's always an inherent risk. But ultimately, when you just look at it from a fundamental standpoint, they're generating fees, so people want to use their product at a rate that they're basically covering their entire valuation. Another one that's really interesting is Aave for the same reason. They're trading about a 7-to-1 ratio fees to market cap. And they're also profitable. So they're earning about, I think it was like $13 million over the last 90 days. And that's really impressive. I think it's more than any other protocol or any other application, I should say, in terms of actual earnings. And that's not something you see often in the space. A lot of times, like I've mentioned, you'll see projects making a ton of fees, but then it's offset by the incentives. And Aave is not in that boat. And that's why I mentioned them on a previous podcast. And we'll continue to kind of pound the table for them just because they have great name recognition and they've really been able to continue to add users, continue to increase their TVL, and then fees have been following along as well. So really impressive stuff by Aave. And then a few others that I think are maybe not as well known, but I do think have some major upside for the same reasons are Aerodrome. So that's a DEX that's really the core DEX of Base. So because Base doesn't have a token, the only way to really get exposure to the ecosystem is to participate in their actual applications who do have tokens. And Aerodrome and their ticker's AERO is probably the most used product on Base. And they're generating, I think it was around 51 million in fees over the last 90 days, and are trading at about a 3.1 ratio. So that's pretty low compared to most. And when you think about the upside of Base in general and the amount of adoption that you're seeing on Base, I see this as one of their premier products and will probably be the one who benefits the most from user onboarding.
Yeah, I haven't heard too much about Aerodrome, so I'm gonna have to keep an eye out on that. So, one can argue that you mentioned Lido, you mentioned Aave, and while these are reputable names, Max, they're just not gonna give me the return that I'm looking for, right? And I'm speaking as other people, but to that I would argue that you would rather have something that has a sustainable business model that isn't going to just skyrocket overnight, but is going to gradually increase over time. I mean, would you agree that that's kind of what you can expect out of these? Like these are not the type of projects that are just going to overnight moon for you, right? You're not looking for an overnight get rich quick type of thing here. You're looking at real fundamentals, you're looking at real use cases, real utility. And you treat it almost like if you were in the stock market, right? You believe in something and that's why you hold it. So this is not so much for like somebody that's trying to get rich overnight. This is more for like a long-term investor. You believe in Web3 and crypto.
Absolutely. But to that same point, I do think that these could easily outpace other protocols because when you look at it, like eventually people will get more into the fundamental side of how they're investing in the crypto markets, I believe. The meme coins are awesome if you're trying to do a quick, 10x, 100x. That's probably going to give you your best chance at that. But if you're just looking at the market as a whole and when it's volatile like it has been over the last couple of years, especially as of late, as we've kind of been in this chop type situation, these are the ones that I actually do think will have the most growth during the bull run. And it's because fundamentally you can argue that they're undervalued. When you have a project that's maybe trading at 100, 200 times their actual fees, then when the market goes, people might speculate and buy into them, but there's nothing to really support it from, any sort of metric to say this makes sense why it's valued here. And eventually, as we get more adoption and we get more institutional trading, they're going to want to know some of these fundamentals to make sure that the bets they're making have a chance to win. And so when you see most of the market trading at 2, 3, 400 times multiples, then you start to look at the ones that aren't, like Lido, like Aerodrome, Aave, Jito, DYDX is even one up there, where you just look at it and you say, well, why are these trading at 4 to 5 times their valuation when they're actually the ones who are earning fees? They're actually getting people to want to pay to use their products. And then those could easily take off and start to get closer to the multiples of some of these others, or vice versa. These ones that are just fundamentally overvalued will have harder falls because there's really nothing to support their current valuation. So in a way, I agree that these are ones that if you're investing for the long term, make more sense and you're looking for more like long-term growth. But I also believe that they could end up just outpacing some of these because they have reasons for people to say, this is worth investing in, so I'm going to put significant capital into these. So it could go either way, but at the end of the day, I believe they're going to outperform in the next bull market as more retail investors get into the space, as more traditional traders get into the space. They're going to be looking at the fundamental side of things, and that's a real opportunity on some of these. Even like a Uniswap, right? Like very well known, has a lot of revenue, but I think they're trading like 12, 13 times their fees. So it's like there's other DEXs out there who have significant fees, even more than them, who are trading at less. So why wouldn't you want to make that beta play and try to go invest in one of the other ones. And then now it's going to catch up to these, other protocols in terms of that ratio.
Yeah, I was just pulling up some of the charts, Lido, and now looking at Uniswap. I mean, they're not obviously at their all-time lows, but they're kind of near the bottom, right? Where if you're wanting to allocate, maybe it wouldn't be a bad idea to put a little bit of money in these.
Yeah, and honestly, like when you look at like Aave, and I know I mentioned it a while ago when it was, I think it was like at about $100 or just below. It started to kind of creep up, and there's been a few different instances where the markets have been trending down, and Aave just continues to kind of like work its way up and grind its way up. And I think it's because of this idea that it's like fundamentally sound, and people see that. So when you have these retraces, it doesn't retrace as far, and then when you have the upside of the markets, it seems to go up further. And yeah, you can see in this chart, like it had some really high valuations. So it has a large gap to fill. And I do believe it's going to eventually get there because they're continuing to grow. People are continuing to look for more utility for their ETH or whatever other assets they support. And honestly, borrowing is one of the most beneficial things in this space because you can really increase your capital efficiency and leverage your current assets. Obviously, that comes with risks, but I think one of the number one things users look for is that ability just to take the capital they already have and get more out of it. And borrowing is a great way to do that, and it generates a lot of fees. So that's why
I
I've
was
been
actually
just
going to I was actually going to ask you, Max, like, you're talking about Aave, you're talking about Lido, Aerodrome. I mean, are you actually using these platforms, or are you just like investing in them and kind of set it and forget it type of thing?
yeah, it's funny you ask because I would say I don't really use them. I will go and test them out and see what the user experience is like, get a feel for the protocols, but I don't typically use them. And that's really because most of my assets are just spot tokens that I hold. I don't really participate too much in like the DeFi side in terms of like the yield. I do a little bit, but I really just the only things I really use are the borrow and lend. I do like to leverage my capital and also kind of protect myself in a way. Like if we were to have a 50% retrace, sure, I would get liquidated. But I've also taken some of that capital out of the markets, right? And either utilized it in the real world or put it into other tokens that are in spot. So you're losing, but at the same time, you protected yourself from losing everything, and repurposed it in a different space. I would say like I do use DeFi protocols, but I definitely don't use all the protocols that I participate in. But certainly like to check them out to make sure that if I'm going to invest in something that I believe that it has what it takes to be successful, whether that's a good UX or even just a good UI. I've had some tokens I thought were undervalued, and then I went and actually looked at it, looked at the product, and started to make sense. Either it was really hard to figure out, or the UI was just really, not well put together where I just couldn't see where new users would find it an attractive place to participate, or even utilize. So I don't think you necessarily have to use all these protocols just to understand whether or not they're valuable, because if others are, that's really all that matters.
Well said. So we highlighted four different projects on the lending borrowing side. You mentioned or restaking. You mentioned Lido. You mentioned Aave. You mentioned Airdrome. Was it just three? It was three that you mentioned, right?
Yeah, I think Aerodrome.
Uniswap. You also mentioned Uniswap, which obviously is one of the most popular exchanges. Anything else that we are missing, or does that cover it all?
That covers most of it, but there are a few what I would call hidden gems. I know you alluded to it earlier on. And for me, the reason I think these are hidden gems is for the reasons I've already mentioned earlier. They generate fees. Their ratio of fees to market cap are not overvalued or not overinflated compared to others. And some of them are even profitable. And that to me is where it becomes very interesting. So Aerodrome was actually one of them I was going to mention. And they're not profitable, losing quite a bit of money. And I'll show on my screen quickly for people to see.
But that doesn't necessarily bode well, right, for the conviction of
Correct.
using Airdrome.
Correct. But what I'd kind of like to explain here is why I still think this is something that is interesting. Because when you look at them, and this is just a financial statement, when you look at their fees, and this is on a monthly, and so we just started September, so this is going to be much lower. But if you take it back a couple months and look, their fees have been pretty consistent. They've gone down recently, and I think that's a lot to do with the general or the general sentiment going on in crypto, and we've seen ETH fees at all-time lows, things like that. But what I've really noticed is like the revenue has stayed consistent. Their fees are staying fairly consistent. But what's not staying consistent are their token incentives. They're dwindling down every month. So we go back to May, they were 58 million, went down to 41. Following month, they went down to about 37, now down to 30. And then this month, I'm sure they'll be around 25. And while this is happening, you can see their net earnings are negative, but slowly creeping up towards that positive area. And to me, that is something you definitely want to see. And then when I factor in some of the other aspects that relate to Aerodrome, like the fact that they're on base and that base is more of a newer L2 and it's continuing to grow. And we're seeing it on all the different metrics that, if you're on crypto Twitter, I'm sure you've seen the fees generated consistently climbing, the active users consistently climbing, and they're tied to Coinbase. So from like a qualitative standpoint, I see a lot of upside to the base ecosystem. And if this is going to be the premier application, I see a lot of growth that can still happen here. And when you look at their financial statements and you see that the expenses are actually getting lower, while their revenue and fees are staying pretty consistent and ideally will start to grow, that bodes well for the long term. So that's why I would say I think it's really still an interesting project for me and one that I'm going to and have been investing in. And it doesn't necessarily mean that I won't invest in things that aren't profitable. It's just I have to see how it's going to get there eventually. And another one that I'm pretty interested in is actually Trader Joe's, and that's a DEX on Avalanche. Some people have probably heard of this one. It's been around for a while. And although they don't generate significant fees, it was about 7.5 million over the last 90 days. They're actually profitable. So they had over about $1 million in profit over the last 90 days. So even though they're only generating, 7.5 million, they're spending less than that. And a lot of protocols may generate 10 times the fees, but are then also putting out 10 times the incentives. So when I see a product like this that's been around for a while, consistently generating fees, but then also generating net profit, to me, that's a project that I'm interested in. And then when I see it's only trading at about 5 times price to fees ratio, that again feels undervalued to me. So that's another one I've been keeping an eye on. I have not scaled into it, but it is one that I will be definitely thinking about over these next couple of months as the markets continue to kind of go sideways. And then the last one is Jito. So Jito is another, I'm pretty sure, like essentially liquid staking. But what's interesting again about them is that they're generating close to 100 million in fees over the last 90 days. So they're one of Solana's premier projects on top of that, and they're only trading at about 8 times their the fee to market cap ratio. So again, they're not quite profitable yet, but they are generating a lot of fees, but are also emitting a lot of incentives to really make that happen. But then you factor in qualitative things again, and you look at Solana and its growth and its potential, and it being one of the premier apps, and in a category liquid staking that was proven to be very profitable. When we talked about Lido earlier, and how they're probably one of the highest fee generators in the space. So when I add those all together, that's why I get bullish on those, or on Jito specifically. So those are definitely ones that I would say are a little bit under the radar, and could be some hidden gems in the long term.
Yeah, and I wonder if Jito's success partly has to do with the fact that when you go to your Phantom wallet, I mean, literally, like the first thing you see is the ability to like stake your Solana, if I'm not mistaken, and that's with Jito. Is that right?
Yeah, and they do some unique things too. Like they generate fees from the liquid staking, or sorry, they generate incentives from the liquid staking, so that's how you're getting some of that additional value. And they're also generating from the fees on doing the liquid staking. But then they also do MEV. So they capture MEV from Solana, and then they also redistribute that. So there's an additional layer of fees and incentives being earned by Jito that go back to the token holders, which then again, for me, is something that I find very interesting. So yeah, I mean, those are all, in my opinion, great opportunities at the current valuations. And then when you add in the qualitative side of things, I think it just adds even more value to where they could possibly go in the future.
Max, you brought a lot of alpha to the episode today. This was extremely useful because there's not a lot of positivity right now in the market. But when you look beyond what's happening, when you hear the news, you look at the fear and greed index and you actually look at the numbers and start to make sense of them, like you can actually see, not just have wishful thinking, but you can actually envision a scenario where like, this is a sustainable model that can potentially, surpass, get us through this short bear market, if you call it, or whatever you want to call it, just downturn, and really be successful in the long run. What's the name of that site where you were pulling up the fees?
Yeah, it's called Token Terminal. And I absolutely love it. I only have the free version of it, but it still allows you to do a lot of research. I really enjoy using the crypto screener. They have a ton of different like metrics you can measure by. And I really look at a handful of different ones to get a feel for which which tokens are kind of like outliers or which projects are outliers. Because you can, like I said, you can sort it by fees, and there might be a ton of projects on there that are generating fees. But then when you look at the incentives or you look at their ratios are, astronomical. Like they're trading at 5,000, times their fees to market cap. And you're like, okay, well, they are generating significant fees, but those are clearly priced in at this point. And will they ever be able to generate enough to really support that valuation? So yeah, I use that one quite a bit. And they also have financial statements for all these projects, which I don't see really anywhere else. And I really enjoy being able to look at on a monthly or quarterly basis. What are things looking like? Like, are you growing? Are you consistently losing revenue, and or are your incentives actually going up, or maybe they're going down? There's just so many different factors that you have to consider. It's nice to have these side by side comparisons to really see where a project is trending, because some might be on the downtrend and others might be on the uptrend, and you can really identify that when you're looking through there.
That's you putting your accounting hat on. I know that's your
Yeah,
background. And also you are head of BD at Archway, which is, well, you work for Phi Labs, but that's a
yeah.
core contributor to Archway. I'll be sure to include those links in the description for anybody that wants to go and connect with you. If you're wanting to build on Archway, you can learn everything. We'll include everything in the description. And also the links to some of these projects that we went over today, including the financial statements. Max, this was a real pleasure, my man. We'll have to do it again soon.
Hey, I always appreciate you having me on, and I apologize to those who don't like numbers just thrown at them. I threw a lot at you today. But I will say, check out the token terminal dashboard and do some of your own research, and I think you'll start to understand, the things I was talking about and why I think those things are valuable.
Perfect. That's a good way to end it. Take care.
See ya.